Hi guys, it's Simon at Kairos Capital Markets. Today I'm going to do an overview of the Australian dollar, US dollar, and where I think it could head in 2017. So I'm going to start the monthly chart as always. What do I see here? Well, we have a trend line here I drew in already here. Two touches there. It kind of missed a touch here. It broke down and come back up and retest. So for me, that's a break and retest of a trend line, which is pretty bearish. Bear in mind, we wasn't an uptrend, then we broke it to the downside, and then we're heading back down again. We have RSI around about here. It was at 97, 96, 97 area. That's quite a bearish signal there as well on the monthly chart. So again, it was like, okay, it's nice to look at. We also had a small Fibonacci retracement from the extreme highs of this candle to the extreme lows. You can tell we pulled back to 618, which is quite nice to see. And obviously we got several, the break and retest actually caused a high test on the trend line, and then we had several smaller deceleration candles afterwards, and now we're breaking down. If you look at the levels I've drawn already, just so you know, the extreme key levels are 80 and 70, just where we are now. The next levels I'm looking at would either be a back up to 95 if we did go back to 95, or most likely a fall back down to 65. The next levels you'll see later on is where I think it could head next, but we'll go for that a little bit later. So the monthly, I think it's bearish, and we'll look down to the weekly and daily just to see what actually has changed here. So again, I've left this blue trend line in from the monthly chart. It's just a beautiful trend line, and you can see we actually had a nice little doji on that as well, on the key level of 77. 77 is key, I felt, on the weekly chart. A bit of chop around there, but it always closed below it. There you go. It come up here, double top there again, so it tested that. A break and retest, and several tests there, one there as well, and recently a bit of chop, and then we had several tests again of the 77 level. So it was quite a nice level to trade off of, and definitely key to see what's happening. The next level I got inside is 73. If you zoom out here, you can see why. We've got, like, you can see, got a zone between 70 and 77, and in the middle is 73, and you can see several break and retests several times. This area here, on the left here, and there as well. So I thought that was quite nice to see there. Now on the pattern wise, we've actually created, you could say, a double, triple top, or multiple high tests across the 77 level. So it showed to me that the weekly 77 was the key line in the sand. If we broke above 77 and broke above the trend line, that means we'd have a fake out, but we never got that. So it shows to me this level held very, very strongly, which is nice to see if you want to take it short. Then we broke down. We came back up and tested the weekly 50 EMA with a couple of dojis, and it dropped down again quite nicely. So the 73 level hasn't been respected on the weekly as such very recently here. On the daily, we'll show it a bit cleaner, and you see where I think it'll go next. Also on the weekly, we're going to have a bit of MACD divergence. So if you notice here, there are lower highs here, but here it's virtually the same, it stayed still. So to me, that's divergence, which is quite nice. And to start off on the RSI, we actually had RSI on this second double top here. There's a double top there. If you look like this, and you saw the chart there, you had a double top, and RSI was actually at 99. So that there at the time was a very bearish signal as well. So far at this time, we've got bearish weekly and a bearish monthly. Let's have a look what the daily shows us and where we think it can go next. There we are. So I've not included the monthly line, trend line, because quite clearly I know it's there. We haven't broken above 77, and I was quite happy to put some lines in the sand to see what happens. So leading up, before we had this great fall, we actually had this trend line going upwards. It's 1, 2, 3, 4, 5 touches. And while I was actually trading off of it, this one hit, these one around here was very good to trade long for short-term gains. And again, we could do that quite a lot. We can on the daily chart, but just for long-term, we could stick back to that for a minute. So as you notice here, we was making higher lows all the way through, and all of a sudden we just dropped down. There's your first higher low, and we pulled back to this little zone here. This zone in the past has caused a bit of resistance and support. It's a bit choppy as well there, very messy, but it produced a very nice signal there. Also, if you do the Fibonacci retracement on this part, we pull back to the 382 level, which is a nice pullback it is, especially when, I think this was when, that's when Donald Trump, I think, was elected there on the 11th, that's it, in November. It dropped down, come back up, there's your pullback. This is how we trade news. You let the news happen, pull back, then enter here. This was the rate, the Fed rate hike here as well anyway, but this was a nice candle to trade off of with a bit more confidence. And then we drop down again, making a second high low, a lower low, sorry, and we're going to come up, I feel we'll come up to the 7335 area. This is where the daily 50 comes in again. It's got tested there, it come up to there, and it produced again, hopefully, another nice signal. So what I'm waiting for in this chart very quickly now is a pullback down to 7335. If you zoom out a little bit, 7335, look how clean this one is. 1, 2, 3, 4, 5 touches and a bit of chop there. So that, for me personally, is a great daily level. You've got lots of confidence there, and that's where I think the price would head next. If we get the signal, I'll be looking to sell there. So if I was to sell there, where would my target be? Now let's go back to the weekly and monthly, because I feel that the weeklies and monthlies are where we're going to be heading next. With a strong dollar now, clearly you can see that on the DXY. I feel that if we break the 70 level, so 70 is the first level, clearly on the monthly, if we break that, then we're going to head down towards the 65. 65 is key purely because we got a touch here back in 85, touch here in 93, a little bit of chop but we fell down, then we got again here, we break and retest here in 2003 and 2008 again, a little bit of chop but we did about rally off that quite hard, so I wouldn't be surprised if we get down to 65. If we do break 65, if we have a break and retest to 65, that would be an excellent short opportunity to head back down to around about the 57 area. 57 is key because you've got this touch here, and this touch here. Some people said 60 is key. You could say it is, but unfortunately I've only got one touch here and nothing really clean in between, where these here is more of a cleaner level. So 57 I would deem be a better level. And then if we do break and retest that, the lows would be 50. And the reason why the lows are 50, here is your double bottom at 50. And let me explain what happened here. You could put it, if you wanted to, some people say, oh no, the double bottom happened at 48.50. This is the monthly chart. Round things up, round the numbers up quite nicely, and you get a clean example here. So price come down, then came back up. Them two candles there have rejected the level. Price came down and then closed back up again. Not as strong, but it's still reversal candle and still closed above the 50 level. So a round number, both sets of candles closed above the 50 level. That's what I'd be aiming for as well. Obviously, we use smart stop placements. When I start teaching people properly, with the educational courses I've got in line coming in for 2017, you understand exactly how you'll capitalise on most of these trades here. I'll also do an update on this chart every week as well as the pound yen, so you actually get to see an exotic pair and a major pair. And hopefully you can see how I trade. Both styles are almost the same. The way you read the charts are the same. It's just how you enter the trades that make the difference. Anyway, I hope you have a happy new year, and I'll see you in 2017. Thank you.